Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. All right, best stocks to buy now. And I've been doing this style of video for a couple of weeks now, and it seems to be fairly well received. And I just sort of summarized these top 6 stocks that I'm really high on right now. And they've been doing really well as far as the last week was huge. It was great. I don't know about you, but after getting kind of hammered, my portfolio was up a bunch, almost like 14%, which was fantastic. And I hope yours was too. If you own these 6 stocks, you probably had a real nice week too. And if you're not happy with how last week went, I don't know what to tell you.
Are you not entertained? Are you not entertained?
Yeah, because I was definitely entertained. So hopefully we can keep this progress going. It's hard to say, man. The market is just so difficult right now. And one of the biggest problems, besides the fly in the ointment, which is this, brutal gas prices, which is really playing a role in inflation. It's just been a total pain in the butt. The prices are coming down a little bit because of demand destruction. Basically, the Fed's pushing us down into a recession because that's the only way to bring inflation down. The other way would be to drill a lot of oil here in America, but that's not going to happen. There's too many things pushing against that. So we're going to probably go into some sort of recession. Hopefully it's shallow and not brutal, but that's where we're headed. And this right here tells the story. This is the Michigan Consumer Sentiment Index, and it's something that a lot of people on Wall Street look at very closely. It's the lowest it's ever been at 50.2. That's the lowest that it's ever been since they've been tracking this. So people are pissed off, upset, and worried. That's basically what that means. And when people are all 3 of those things, here's what happens with stocks. The first thing that happens are the small caps, micro caps, etc. They get crashed all the way down. They've gone from a P ratio in the 20s all the way down to 10, which is almost the lowest it's been since 1999. The only time it's been lower was in 08 during the huge crash. That was the crash of a generation. It's as low as it was during the peak of the fear of the Rona. The mid caps, of course, have been crushed as well. They're the second to get hammered. And then lastly are your large caps, your FANG stocks, and now they've been getting crushed. So that's what we're dealing with. But I do think at some point all 3 of these are going to start picking back up. I would expect the smaller ones to go back first. And Meta had a great day the other day, up 7%, up over almost $12, and wound up at 170. Remember, this thing was under 160 last time I did this video. And it actually, I think it was a 158, which I had to partake of that for sure, because under 160, you got to be kidding me. And now it's sitting, like I said, it's run back up to about 170, so that's nice. And let's remember, Meta is still under a 13 PE ratio. This is one of the most profitable companies in the world. I mean, they made $7.5 billion last quarter, and the quarters before that, they averaged 10. So it got punished a little bit for only making $7.5 billion bucks. And its balance sheet, there are a lot of countries in the world love to have that balance sheet. Meta is a very high quality company that could not be stronger financially. Now, granted, they've burned through a lot of money on the metaverse. They've spent about $10 billion on research and development, but I'm a big believer in the metaverse. You don't have to be to own Meta because it's such a quality company and makes a lot of money regardless. But I think that's going to be the future of a lot of what people are doing with their own avatar and a lot of meetings that are not going to be in person. You know, that's just kind of how I see things going. You may disagree with that, and that's okay. But I think Meta's a great buy. And I jumped all over it. And I'm continuing to sort of add to it on any pullbacks. Now, here's a company, Palantir. This is one that I like this company. I just do. I think it's got the juice. I really think it's going to be special. And so I was saying it was really good buy under $8, and it's gone up. Now it's over $10. It went up about 7% as well Friday. Everything jumped Friday pretty much. And it's sitting like, say, over $10. On any big pullbacks, I'm all over this stock. I own quite a bit of it now. I've been buying ever since $12 all the way down to $6.80. And so I'm very comfortable with my position in Palantir. But if it pulls back or we have a bad week next week, I'll be all over it. Now realize this is a company that is not GAAP profitable. It is cash flow positive, which is really good for a company to weather bad storms. It's built for that. but it does have one big problem, that's stock-based compensation. That's where the big dogs at the top have been a little bit greedy, and they've been taking too much off the top, and that has really hurt Palantir. But you've seen the market sentiment and you've seen the charts, so everything's gone down more than it probably should. And understand they are resolving that problem with stock-based compensation. They know it's a problem, and it is coming down. So I feel good about this company long-term, and man, is it running. Now we're looking at NIO, which is obviously an EV play in China, premium market. This stock has had a heck of a run. Good grief. I mean, it had gotten down to some stupid prices, got down under 15. I think it got down in the 12s. I think I picked up some there, but I've been buying it all along. And I'm still just a little bit upside down on this one. I'm actually down because I am very bullish on this stock long term. But it's gone up from, I think, like I said, it got down below 12, and now it's sitting at 24. So it's had a 100% run, but realize it had crashed pretty hard like a lot of stocks. So I still see this stock getting above 40, and it's already got several analysts that are calling for in the 30s and in the 40s. So long term, I really like NIO with their ET7 that came out, the ET5 that's coming out in September, the ES7 that just came out. This is a company that's growing like a weed. They have had two big problems. Number one would be the lockdowns in China, which are stupid. They make no sense. No other country's doing it. But that is a risk. The other is delisting risk. And China's saying all the right things, but the SEC is not going to have that until they see that these companies are allowing auditing. Now, really, it's not the companies. It's the Chinese government that's not allowing it. But like I say, they're trying to resolve it, and hopefully they will. If either one of those things get resolved, I think this company will go up significantly. If they don't, that's the risk. So just know that. The next stock I'm really high on is MP Materials. Man, I love this stock. I really do. It's a picks and shovel play. It's an EV play. It's the only mine in North America that's mining those 14 rare earth elements. It's extremely important to the country. Their debt structure is fantastic. They bought it out of bankruptcy. That's probably about the only way you can have a mine in North America, given all the restrictions and how difficult it is to build one and make really OSHA and EPA and all that happy. So they bought it out of bankruptcy, and it's very profitable, and it's growing like a weed, and its profit is growing like a weed. And those 14 rare earth elements are not going down in value anytime soon, I don't think, because they're in high demand, very high demand, as these EVs and batteries, lithium batteries, et cetera, continue to be built. And this company, I told you below 35, I loved it, and I've been buying it all the way down and down into the 32s. I started buying it originally at 25 because I'm still mad about that because it was a SPAC, and I ignored it. I could have got it in 10, 12, 14 bucks, but I just didn't see it as an EV play, and I'm pretty high on EVs, so I kind of blew it on that. But I've been trying to make up for it by accumulating at these good prices. And like I said, it went from 32 to 30, almost 36. It was up 11% Friday. I love this company. As you can see, the financials are great. They're up 430% in their margin on their net income. $166 million revenue in the first quarter with $85 million in net income. That's fantastic. 51% net profit margin, all up huge. Operating income up 400%. I mean, it's just unreal. And they're getting ready to have a phase 2 where they start processing those materials themselves instead of sending it off. That'll be another profit center for MP Materials. This is one of my absolute favorites. And this company is not loved, let me assure you. When I do videos on MP Materials, I don't get any views at all. I have like 700, 800 views. Nobody cares. This is a great company. That's my opinion. I could be wrong, but I don't think I am. All right, the next two companies are penny stocks. Take that into consideration. This is higher risk than these other stocks, so always remember with penny stocks, I'll bring in my assistant for this.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
Yeah, that's right. Danger Will Robinson. Always know that. But Ilus is one I really like. It's a profitable company. They have more going on than any penny stock I've ever seen. This is a mergers and acquisitions company, and they are rocking and rolling. I think they own like 8 companies now underneath them, and they're getting ready to add a 9th through a special purchase vehicle, which really means they're adding a very large company that'll be underneath their umbrella. And again, they are profitable, and that's pretty rare for a penny stock. And I think this company's got a good future. There is risk because it's penny, but I wouldn't be a bit surprised to see this thing go up in a significant way over the next year or two. But, you know, that's my opinion. They are working towards NASDAQ uplist, not only through one of their spinoffs, but also the company itself. And they're also working towards moving up to the OTCQB, which means they'll be heavily audited as compared to Pink Current, and that's always a good thing. I like that. And lastly, we've got CYBL, which is Cyberlux Corp. And this is a company that's mainly known for the LED lighting, which they sell to the military, many of the branches. And it is, again, a profitable company, which is, you know, I guess that's why I'm high on both of these. They are profitable, and I really like that in a penny stock. It's been hammered like every other penny stock. As you can see, it got all the way up to 6 cents. It's now at 1.3. And I think long term, if they continue the growth path that they're on, this could actually become a value stock at some point because they are profitable. They do have a PE ratio, and their market cap's not that high, but their future PE ratio or their forward PE should be pretty good if they continue down the path. They did about $6 million last quarter and had about $1.2 million in profit, which is a very nice margin. And they also are doing software as a service and platform as a service. So again, very profitable. And they're looking for $44 million in total revenue this year. At their current rate, they'd be at 24, so they're looking for a lot of growth. So this is another company that I do like. Do realize they have a yield sign right now because OTC is not happy with how much current information they have there. They just sent an amended quarterly report along with an attorney letter that states that they believe it is current and the lawyer believes it is current. Now, granted, the OTC's got to agree to that, but they did just send that in. So if that goes from yield to pink, this stock should jump. All right, folks, and that's the 6 stocks that I'm high on right now. I've been buying a few others on top of that, but these are really the ones that are jumping out at me. And if you like this content, be sure to hit that like button. Lets me know to continue to cover these stocks this way. And if you haven't subscribed, I'd appreciate it if you would. Great week last week. Couldn't be more pleased. Hopefully, we'll continue down the path, but boy, you never know in this market. So, you know, always use caution. And I hope you did like the content, and we'll see you next time on Mr. Frugal Investor.